third product in our basket, which is a balanced advantage fund. A fourth product you can add on, which I like personally, is the provident fund. While both equity and debt have their advantages, the returns when the interest rates are high, you will have the NAVs of the debt mutual funds will be low. When the interest rates are going down, NAVs of debt mutual funds will increase. Equities, as we all know, there are bull markets, bear markets. So there are phases for how these funds perform, equity as well as mutual funds. And we need to cover ourselves, we need to protect ourselves against these fluctuations. So like the equity markets are now at their peaks, and we know, as the cycle always says, they will come down. So we would like to remove some money from the equity funds and put it in debt, because debt may be at a lower NAV now, it may go up. So you want to change this allocation. We need to have an instrument which will enable us to move our investments from debt to equity, equity to debt, as these cycles keep on occurring. And that is what is the third product that we are focusing on, which is a balanced advantage fund, where you have got an equity component as well as debt component in that. And the fund manager who is going to manage these funds will keep moving in and out of debt and equity, depending on where the cycle is, where the cycle of debt is or the equity is. A fourth product you can add on, which I like personally, is the provident fund, which is a government-backed kind of a product. If you stay invested, this is a good product, and you do not worry about not getting your capital back or your capital getting reduced. You have a decent inflation beating return for over a long period of time. If older tax scheme, not the newer one, you get tax benefit also up to 1.50 lakhs. And this is our final investment portfolio. Debt fund of funds for our low risk kind of an investment. 500 index fund, well diversified over a long period of time. The balanced advantage fund, which is a mix of debt and equity provident fund. This is a good product. So now what we have is a very simple kind of we can also construct this for you, but you can directly go to the mutual funds website. You can start your investment. This is a low risk kind of a basket because it's diversified. You are focusing on all the things, but through this simple strategy that we have, and it's for a long-term investment.